Welcome back. You're watching Closing Bell come to you from the Deutsche Bank India conference. And today the question we're putting out there is whether Budget 2015 has done enough to kickstart the Indian economy. To answer that, I have with me Deutsche Bank's global strategist, Sanjeev Sanyal. Sanjeev, good afternoon. Thank you for joining us. I'm going to start by asking you whether you think he's done enough to alleviate the short-term pain that India Inc. is suffering. We've come off a really tough earnings season. And on the one hand, we were expecting that he will do enough to kickstart investments. He's done a bit, but he's also raised the tax burden, especially for the next year or so. What do you make of the short-term impact?
I think the focus of this budget was very clearly longer term, laying the groundwork for a multi-year process. So really the emphasis wasn't on the short term. Right. Yes, they have announced a fair number of infrastructure spending things. It also came through in the railway budget. But I think the emphasis is on the long term. So in the short term, really they will be relying to a significant degree on reduced interest rates, which, by the way, there's plenty of scope to do.
Okay, I'm going to come to the rate question in just a bit. But I get that it's a budget that sets out long-term targets, and I appreciate the long-term targets, especially, the longer-term vision for tax policy, etc. But it doesn't, in fact, instead of alleviating the short-term pain, which it doesn't do, it's added to that. That's what I was seeking a response on. For instance, does that change your outlook on earnings, for this year or next for corporate India? Does that change your outlook on how quickly we'll see a recovery in private investment?
I think, as I said, the emphasis was entirely on the long term. And yes, there are a few things, for example, spending plans on investment projects, which I think they will begin kickstarting quite soon. There is this feeling in the document that really India requires a much longer term vision, and that has to be done one step at a time. It's not about the big bang. I think that was emphasized repeatedly in the speech and in other places, that this is the moment where they're going to take the pain if necessary. But frankly, the economy is growing at some clip, whether you agree with the GDP number or not. It's got some momentum in it. And if you bring down interest rates, it can be kept going while these longer-term things are being implemented.
The infrastructure spend that they've announced, at the cost of deferring out or pushing out the fiscal deficit targets, is that going to be enough of a starter, to get private investment back?
I think yes. I mean, there are several interesting plans, but I think the railways was a particularly interesting area that they have given focus. But as I said, it's in the doing that really it matters. If they do all the things they have said in the railway budget and other places, then it would be fabulous. So it's really about rolling up their sleeves and hammering the nails in.
So this budget hasn't led you to revise your earnings expectation from corporate India based on a not big enough public spending amount and based on higher tax burdens?
No. So
it hasn't?
I wouldn't say yes or no, because quite frankly...
But it would have had some impact on the way you look at earnings for the next year or so.
It has definitely made me feel very much more positive about the longer term. There's no doubt about that. Shorter term, I'm not sure, because as I said, it really depends on what the next few steps are. It's really about hammering in the nails. And I need to know exactly how that goes about.
Okay, fine. You've put the burden of the shorter term fix at the doorstep of the RBI.
Yeah, to some extent, yes.
Yeah, so the consensus was at the beginning of this year that we would see maybe about 1% in terms of interest rate cuts through the course of the calendar year of 2015. Or would you subscribe to that, or are you expecting even bigger cuts?
I think the potential for even bigger cuts is there, because inflation has come off quite a lot. And unless oil prices again zip back to where they were a year and a half ago, I think non-food inflation has come down very, very significantly. So there is scope for very large interest rates. The question is, will that weaken the rupee? My view is that it will not. I think there is scope for large reductions in interest rate and the rupee staying where it is, and even perhaps appreciating if the economic momentum gathers.
On the back of higher fund flow into India is your premise, I assume, right?
Yes.
Okay. How much in terms of an interest rate cut are you expecting 2015? Or what do you think the RBI should go all the way to?
I don't know what they will do, but I can tell you what
should go.
I think there is scope for doing 200 basis points.
200 basis points
200
this year.
basis points, yes.
So you're putting the entire burden of kickstarting the economy at the RBI's doorstep.
This is a very big deal.
You've excused the government for, inflicting more shorter-term pain, and you're putting much of it on the RBI's doorstep.
No, it's circular. Who is the biggest borrower in the system? It is the government. You reduce interest rates, the biggest immediately gives enormous space to the government to spend more because its borrowing cost falls. Also remember that what is happening in the banking system, what is the fastest and easiest way to liquefy the banking system, get the credit process going, is again to reduce interest rates. The banks are sitting on huge portfolios of bonds. They would immediately appreciate and generate, liquefy their balance sheets. So I think it is a very important ingredient of what needs to be done right now. It is a necessary, not a sufficient, but it is a necessary ingredient.
Okay. How would your equity strategy change for the year for India now that the budget is out of the way?
I think we largely got what we expected. Now, of course, as I said, I do expect significant monetary easing.
Right.
But then we also need to see the actual spending of these projects. You see, we can announce many things, but what actually gets implemented is key. And that is why I said it's all about in the implementation. And that is also true about many of the other things that are, there are a lot of things being talked about, creating a holding company, making appointments in the public sector banks, and all that kind of thing. It's all in the implementation.
But not enough capital for banks, given these constraints, right? Yeah.
So that's precisely
the big problems didn't get tackled, but a lot of the other equally important things.
Reducing interest rates immediately liquefies the banks. So that's why it's a critical ingredient in this whole system. If you do not bring down cost of capital very significantly, you cannot have an investment-based growth model.
Okay.
It's as simple as that. And the whole model that the Prime Minister Modi has is premised on an investment-driven growth model. So you have to lower the cost of capital. It's as simple as that.
I don't know about 200 basis points, but if we get somewhere close to 100 basis points in terms of interest rate cuts, and if the government is able to successfully, sort of at least implement some of the infrastructure spend that they've spoken of and get moving on all the other stuff, are you expecting that this year will give us, in terms of gains in the equity market, the same kind of gains that we saw last year or slightly less than that?
You will get significant gains. Now, I wouldn't put a number on it, but it depends. It's a mix of those things. I personally think 100 basis points is very doable. I think it will be more.
In terms of interest rate cuts?
Yes.
Okay, but you won't give me an outlook on the Nifty outside to say that
I think you're
bullish on where the market is.
Saying that the BSE will go over 30,000 is no longer a big deal. You're almost there.
Fair enough, okay. All right. You liked a lot of things in the longer term.
Yes.
You want to spell out to me what you think is transformational in this budget in the longer term?
I think fiscal federalism is a very big deal. Of course, more money will be given, but even where the center is pushing out the burden of spending onto the states, it's still a very big deal because it's much more efficient for many things like social sector spending, etc., to do it locally. So simply the decentralization of the process as a big theme is happening, and I'm very, very pleased with that. So that's a very big thing. I think going forward, when investors invest into India, they will pay much more attention to which state they go to, and I think this whole business of getting states to compete with each other and all that is now a serious deal. Okay. So that's
one big one, yeah.
The second big thing is that the whole financial monetary area is now getting a proper firm standing. Okay. So whether it is the public sector banks, getting themselves in a holding company, their appointment system getting formalized, whether it is the monetary policy committee that's being created,
or the public debt management office,
or the public debt management office, or the bankruptcy laws that are being put in place. You may argue again that there were certain provisions. Yes, you need to get the court system moving faster. All of that I agree. So there is a lot about the implementation that I agree. But this is a very big area. Even if they do a half decent job, it would radically change capital allocation in this country.
Okay, fair enough. So those are the long-term pluses. A couple of questions. You've already told me that directionally you don't expect the rupee to depreciate in any big fashion, even if we were to see up to 200 basis points cut.
Obviously, I'm talking in a basket basis. Obviously,
that's predicated on what price of crude, though? Are you expecting crude to stay around 60?
I think anything below 70 is par for the course as far as India is concerned. Obviously, if it goes up very significantly, then it changes the dynamics. But then that will change the dynamics of many things else in the world as well. So anything within plus $10 on either side of what it is now is
good. Okay, our final question then on the global context. It seems this week at least benign to some extent. We seem to have gotten past the worst regarding Greece. We seem to have gotten some very dovish comments come in from Janet Yellen. This weekend, yes, of course, we saw the China rate cut come through, and that's going to be the one big question mark facing the global economy. But do you think that the global context is benign enough for fund flows to continue to India in the same momentum?
Yes, I think the capital will remain cheap, and what you're going to see is, interestingly, a return to global imbalances. Basically, what's going to happen, the US will continue to grow above, so basically expect 3% plus growth coming out of the US. This will begin to suck in capital at some point, simply because US infrastructure, capacities, etc., at some point they'll begin to invest in it. They'll go back to running large current account deficits. Meanwhile, China will slow down very significantly. It's already happening, but expect it over the next 5 years to slow down even further. And that will mean that it will generate enormous current account surpluses. So what will happen is that you will get global growth, but also a return to imbalance, which, as I have argued over the years, is not necessarily a bad thing, but it will also generate enormous distortions. So it's a question of managing those distortions. But meanwhile, the huge amounts of capital coming out of China over the next decade or so will keep long-term capital cheap for the world, even if central banks begin tightening. And that is the opportunity for India. And that's why I keep coming back to the issue of lowering interest rates in India. The world is awash with capital and will remain awash in capital in the foreseeable future. So there is no reason for a capital-starved country like India not to go out and get on with it.
All right, Sanjeev, we'll leave it there. We hope the RBI is listening, and I'm sure the government is happy with your assessment that this is a great budget. Thank you very much for your time. Thank you for being on Closing Bell. And with that, Senthil and Sonia, I send it back to you, but with the promise that I'll be back with a corporate panel in a few minutes from now to talk about what the government did for Make in India and manufacturing. That's up next.
Yes,